top to bottom, investor invests in the fund. Like technically their money goes to a client funds account. The administrator will deal those client funds into the fund at the start of the month when they're kind of dealt in and officially invested. At that point, like we've basically got cash in our bank and within the fund, and we're going to either leave the cash there as cash because we want to hold cash, or if we want to actually start trading it, we will convert that into crypto or stable coins. So typically it's going to be a mix of Bitcoin, ETH, and stables, and then we'll distribute that either into sort of kind of on-ramp through an exchange like say Kraken or Coinbase or whatever you want, Almax, and then that goes to the custodian, and from the custodian it can go and either be used as collateral off exchange or go onto the exchanges as collateral where it'll get traded.
Who are you using as custodian?
So we use a company called Copper, which we've used for years, and the two kind of, to my knowledge, the only two kind of real custodians in this space, if you're a trader, there's Copper and another one called Fireblocks. And they're roughly equivalent in terms of kind of proposition and features, but they're both kind of allowing you to create a walled garden of exchange accounts across all the different exchanges. And we, as the asset manager, can move assets between those exchanges at will, but we can't take money out of the walled garden. So we can either have, like we get to move money between the exchange accounts, which are closed off by the custodian and our bank. So the money sort of has to be somewhere within that ecosystem. And so we like that very much because if someone comes into the office with a baseball bat, like there's no crypto for us to give them. And we can show our investors that even if we wanted to join you guys in the Caymans and retire early, there's just no way for us to do it. There are too many kinds of checks and balances there. So once the money is in the custodian, it's converted typically into crypto. From crypto, it goes to the exchange accounts, and each manager has their own set of sub accounts. So if you guys were running a strategy for us, like maybe you have one sub account on Binance, for example, and that's where you want to trade, we'll fund the account, we'll give you the trading API keys, and you'll get to trade that account. And you trade it, you can pull the balances, etc. What you can't do is move the collateral. And if you're running a multi-exchange strategy, the way it works is that we'll expose an API to you, which you can call, and it'll say, hey, Nickel, could I please move collateral from point A to point B? And we will.
Is that a Nickel API or is that the Copper API?
That's a Nickel API. We'll review the request against our kind of trading, our risk limits for that particular trader. Are they going to breach an exchange limit, either at the portfolio level or at their own, except checklist style? And if we sort of accept, then we authorize the transfer, and we're then sending an API request to Copper. And Copper's then checking against their own whitelists, are these assets allowed to be moved from A to B? And if so, they then affect the transfer for us. So there's a lot of kind of checks and balances on the way, but ultimately being programmatic, you're adding a couple seconds of latency.
Does Copper also consolidate for reporting and administrative purposes, or how does the fund admin
So
work?
Copper, so the administrator will pull their own balances. So administrators generally, if they're doing their job correctly, will be plugged into each of the exchanges and will go and look at what those balances are and price them, or they'll use the third party to do that. And then our custodian also provides like trade files and asset kind of inventories as well per account. And then the administrator reconciles all of that.
Gotcha.
So yeah, like from the trader's perspective, you tell us where you want to trade, we give you an API key, and you trade this like it was your own account. On our side, between kind of margin management, risk monitoring, you suddenly need to have like extremely robust connectivity to all of the exchanges that any trader might want to trade on. Mm-hmm. Because our universe is so small that if you're lucky enough to find a good trader, you can't say no for some arbitrary reason. There aren't 10 other traders behind him that you could, just pick from because they fulfill some arbitrary criteria. So I always want us to be in a position that if we're lucky enough to find a great manager, we can just give them money.
You can maximize their potential with your infrastructure.
Exactly.